Aloha, lads and gents. Welcome back to a new episode of A Sense of Capital Insights Time. My name is Julian, and before we start with the actual update, I just want to inform you that we're not talking about any investment advice or consultation whatsoever, and there is no guarantee for correctness of the communicated data and details. Alright guys, so let's jump right into the investment portfolio update. So today we will talk about my private personal investment portfolio and the recent 30 days of September 2023, starting with the actual activities which took place during this period. As you can see here, I invested roughly $530 in 4 different ETFs located in the US, in the Europe region, emerging markets and Japan. And furthermore, I added additional shares to existing positions of the Dutch company Alphen with roughly $1,260 and an even larger chunk of money, talking about $1,990 into the US located healthcare service and product provider Hims & Hers. Let's take a closer look in both sections, ETFs and single stocks, beginning with the ETFs. As you can see here at the displayed table, the overall value of the ETFs I'm holding felt out quite solid and stable with $43,400 and a yield of minus 1.19%. When you take a closer look into the displayed chart, the bars which are heading into the left direction showing the ETFs which decreased during the past period, and the bars which are heading into the right direction are the positive ones. And as you can see on the first glance, only 2 regions, 2 ETFs took a positive upswing, talking about emerging markets, small caps and Japan IMI. Sector-wise, IT remains dominant, primarily driven by the Nasdaq and US Momentum ETF. And when we talk about the regional allocation, as you can see here, positioned and at the bottom of the sheet and marked in yellow, I need to take care that the Japan region is not presented too heavily and overcrossing the target of 6% ETF proportion. Going on with the single stocks, I didn't purchase or sell any of them, so I'm still holding Alphen, Hims & Hers, Indie, New, Perion and StoneCo. Unfortunately, except the neobank New, all of them experienced a quite bad period of 30 days, especially Alphen, as you can see here, was quite hit strongly with a minus of 27.01%. When we talk about the overall yield since acquisition, displayed here in the lower table, only the Brazilian stocks I'm holding, the neobank New and the point of sales, software and ERP system provider StoneCo are located in the positive field. All others, especially Alphen and Hims & Hers, are quite deeply red. Giving you a little bit more color, I fetched together different news to the stocks I'm currently holding, starting with Hims & Hers. As you can see here, they have been voted as one of the best places to work in the healthcare sector. I know a lot of investors not taking a too high focus on this aspect, but of course some kind of battle of talents is going on worldwide, and it is always more easier to keep the existing employees than hiring new ones. So that's definitely a great achievement in my point of view. Then we have another news connected to the semiconductor provider Indie. As you can see here, they expanded their business and created a branch in Dresden, Germany, which is Germany, as you know, and I'm located here as well, somehow the heart of the automobile sector with all the different OEMs, which are quite popular, and I don't think I need to state them right now. So that's great as well. And as you can see here, a lot of the members of the management board of Indie Semiconductor are former employees and staff members of Broadcom, and Broadcom is as well quite famous for doing a lot of M&A activities, and somehow Indie is covering this kind of principle. And as you can see here, they acquired a company, a Swiss company which is named Exelos AG, for roughly 45 million US dollars in shares, and there is still a bonus option for additional 20 million US dollars in the future if the acquisition works out well. Then we have news to the neobank new, and I think that's actually the primary reason why neobank was the big exception when we talk about the single stocks I'm holding, because yes, the rating by JP Morgan was changed from neutral to overweight. As you can see here, currently every fourth Brazilian citizen is somehow a customer of new, but still they just selling 0 till 14% of the products to the local citizens. So there's definitely some upside potential existing. Then we have news about the supplier and demand advertisement platform Perion and their cookie alternative sort, so an own product for it, own service. A kind of a campaign or a test together with Mercedes-Benz. The results, as you can see here, listed at some bullet points on the lower part of the sheet, have been very positive. And I'm not sure if you're aware of this fact, but Alphabet is planning to ban the cookies for privacy reasons in the future. And so therefore an alternative like Sort created and provided by Perion is definitely a good catch if it getting rolled out successfully in the future. And another news to Perion, which is actually the opposite to the one which was stated a few moments ago at Nubank. So Perion lived through a downgrade by Raymond James, and yeah, it's as well part of the game. During the day of the publication of the news, 12th September, I think Perion decreased by roughly 10%. So this is an example what you can see how impactful this kind of ratings can be in the positive way, as experienced at the neobank new, and in the negative direction here at Perion. Yeah, let's go on with the last news, and this is as well hopefully some positive one. I don't know this person, but it is stated here as the industrial leader Kenny Law, which is the new CPO of Perion, and which is interesting for me. Actually, in the past I was a holder of PubMatic, which is a primary competitor of Perion in the advertisement business, but on the supply side. So for the people which want to publicate advertisement, or not the people, the companies. And as you can see, they hired them straight from PubMatic, and let's see what kind of experience and competency can bring into the game at Perion. Alright guys, getting closer to the finish line of today. So in total I owning roughly 89,000 US dollars, and the proportion between ETFs and single stocks is quite in balance, 50-50, which is coincidence and not really based on a specific target or purpose. I expect honestly that the single stock part will getting more heavily and heavily, because I want to set here a stronger focus in the future. On the right side you see a chart which displays the development of my investment portfolio since establishment in 2016-2017. And as you can see here quite clearly, since 2021 I start to invest in single stocks as well. And honestly, most of these single stocks are 100% leveraged by debt and liabilities. So I need to take care a little bit of a margin call, but I will come back later to this topic. To tell you the truth, I would love to skip this sheet because it's showing quite clearly the performance of my portfolio, which is not that great. I'm getting closer to the 0% level with 1.57 yield per anno. It's heavily affected by the single stock section, and again, as you can see in the past month, with roughly a decline of 6.9%. It didn't work out so well, But I'm still convinced by each and all of my single stocks. I definitely want to make sure you understand this and point this out. However, compared to the benchmark, the All Country World Index, IMI, I'm in a negative with roughly 7%. There's a lot of room for improvement, and somehow I need some very strong tailwind to catch up in this scenario. What's going on mentally? You can see here again the title of this video, Go Hard or Go Home. Honestly, of course, for most of you, it's not a big struggle, the Korean period, and it's not that challenging for you. But for me, it is. Why? Because, as I mentioned already earlier, a huge chunk of my single stocks are 100% leveraged, and therefore there's always the risk of a margin call, and I'm somehow running out of financial resources. And that's the reason, as you can see here, the bar is not completely positioned at relaxed. I'm a little bit stressed, not because I'm not convinced of my ETFs, I'm not convinced of the single stocks, or I have doubts in the overall micro or macro economical situation. No, that's not the reason. It's just because of this leveraged aspect. But I'm just very aware of the situation. I want to prepare myself mentally what could happen in the future if somehow the markets crash or will crash in the future. However, that's just a scenario which I have in my mind, but I'm in general very optimistic about the stock markets, and therefore I'm staying invested 100%, even pushing stronger the gas pedal, and let's see what the future brings. What are the next steps? As I mentioned, there is a certain risk of a margin call, and therefore I've decided to lower the amount of monthly investment into the ETF section to approximately $260, just investing in one single ETF, which is in this period the European small cap one, and setting a higher focus on debt redemption, making sure that the current level of liabilities, which is roughly $42,000, getting decreased, and not running out of financial power, because there is a higher chance, in my opinion, there is definitely some potential existing for future investments and further negative developments in the stock market, and I don't want to miss those chances. And therefore, staying financially stable is definitely the major prioritized aspect for now. That's it for today. Thank you very much for joining. If you enjoyed to watch the video, make sure you like the video and subscribe to my channel, A Sense of Capital, to not miss any content in the future and be one of the first ones who supported my channel. Make sure you take care of yourself, stay healthy. I think that is more important than any money on the world. And see you next time. Goodbye.